Now, I told you earlier in the week, I thought we would likely rally with the jobs report. Now, why do I say that? Because, again, why did I think that? Is because, again, still think the NASDAQ's going to fill the gap at 20,400. I think that'll carry the S&P to a new all-time high. S&P is going to go up and hit the upper channel line and probably the upper boundary of this rising wedge. This is the S&P risk model. The risk line is still bullish, even though we pulled back. NASDAQ and S&P have pulled back. The risk line is still bullish here. We're still in a risk-on environment here. S&P trend here is still bullish. I don't always get a chance to share this chart with you. Believe me, I look at a lot of charts every single day. It also went into my thinking is that we're still in a risk-on environment, so I wanted to take the time to show you that. I still think we're going higher, and again, I think we're going higher. I think we will top out, but I think the rally will continue. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the chart, you like the indicators, please let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. I just put everything out there and ask that you partner with me. I do need to hear from you. If you could take a moment to help out, I would really be extremely grateful to you. Do that because I don't have any sponsors. I turn all those offers down. I don't want to sell you a bunch of stuff. I need websites that want to sell you a bunch of junk that you don't need. Please consider helping out today, and I thank you for that. Look, the S&P is going to go higher, as I think it will. The VIX has got to drop back below the 50. It came back down, and it came to just above the 50-period moving average. If it drops, again, I'll be watching the 200. I'll be watching the lower boundary here of the band. I'll be watching this volatility pull back, allow the S&P a little bit more time. I think the S&P will complete that divergence in all likelihood next week in the daily time frame. Watch the video all the way through, and you'll some very important things. And again, I will be posting probably Sunday afternoon, maybe Sunday morning, but probably Sunday afternoon, one of those, a very short video about the jobs report. Check back for that. Earlier in the week, I was looking for a pullback to come to a conclusion. I told you I thought there was a good chance we'd rally with the jobs report. Exactly what happened. The Dow was up 341 points, up 0.81%. The S&P 500 was up 51 points, up 0.90%, almost up 1%. NASDAQ was up almost 1.25%, and the Russell was up 1.5%, faring the best. Meanwhile, the VIX was down 6.25%, back below 20, dropping down to 19.21. Rally took place. I told you I was going to be looking for a divergence to set up here on the awesome oscillator. Still think we'll see green bars next week. But we got a bullish reversal of conditions for momentum today. You see the little blue arrow? You see the cloud? We closed above it. That's going to flip back to a green cloud. Told you we get a couple of bars that were with red here, with that little red arrow. About the pullback, we got a black candlestick at the peak there. It's about the intraday charts turning bearish, and then the daily charts here. But I told you I thought it would turn back to bullish to form a divergence. I still think that. That's exactly what is happening. This is the S&P 500 daily chart. Oh, and surprise, surprise, NASDAQ did the exact same thing. Again, it had that black candlestick. It pulled back. Again, told you we're still in positive territory. We got red bars on the awesome oscillator. I told you I thought a divergence would develop. I think you're going to see green bars going into next week. We've got the little blue arrow, meaning we closed above the upper boundary of the cloud. We're back above these 10-period moving averages. Remember when I talked about how S&P or NASDAQ still sold off, but NVIDIA, only 3%, and got back above its 10-period moving average now. And I told you Thursday, I believe, NASDAQ's getting back above the 10-period moving average, joining NVIDIA, as I was warning would happen. Again, I've been talking about a divergence developing here. That's why I told you, again, this pullback is likely not the reversal. I told you I'm open-minded to it if we start seeing more damage, but I told you I didn't think so, and I have the guts to tell you what I think. We're going to go up. Here we are. Now we're closing above 20,000 again. We were just under the gap fill at this peak right here. I think we're going to exceed that high, fill the gap, probably overthrow the 20,400 area, not exceed 670 was our peak back in July, I believe, something like that, 670, 690, whatever it was. It was just below the 20,700 area. I don't think you're going to new highs, and if I'm wrong, because I have the guts to tell you what I think, if I'm wrong, again, we have that trend line in the weekly time frame, which is just directly overhead. I don't think we'll go too much higher. They're on the monthly chart. I think you're going to see green here. I think you're going to go higher, but then I think you're going to top out. Again, let me be clear. While I'm predicting the rallies for NASDAQ to fill the gap at 20,400, S&P to go make a new high, again, my target level was 5750 to 6,000. I told you when we pulled back in August on S&P, we didn't make those new highs yet. I told you we were going to, and I told you, again, the target levels are based on the monthly charts. Long-term resistance going back to 1929, long-term channel. Again, the market having momentum flipping back to bullish, a bullish reversal of conditions, as I've been predicting. And again, I think we're going to see a bigger rally, and then I think you're going to see the top and the reversal, and I catch a lot of people off guard because, again, the soft landing scenario that people continue to believe is going to happen, and it's not going to happen. You're going to have a recession. Today's jobs report puts, again, soft landing scenario in the spotlight, and you got everybody going, oh, no, we're going to have a soft landing. Above 20,000, I think NASDAQ's going to rally another 400 or 500 points or so. Up 1.22% today. I think 241, almost 242 points. I think it's going to rally another 400 or 500 points, give or take there, and fill the gap. Less than 400 points away from it now, and I think you're going to top out. And I think that top could come as soon as next week. We're approaching the timeline 3.5, 4 week marker here that we had previously. And again, it's just a guideline. I'm not telling you the exact day that the market's going to peak or whatever, but we're just looking and coupling things together. No recession is coming. It will price it in. We know divergences are on the weekly and the monthly time frame will begin to play out. We go a little bit higher and see the divergence set up on the S&P 500. I think we could peak the next few days, maybe next week or shortly thereafter. This was 19 days, almost 4 weeks, here. 19 sessions after we got the first cut to the peak. We had already topped, we had already dropped 19.5%. We rebounded for a counter trend, and then the crash resumed and we went on to drop 51%. The rate cuts didn't save the market, it didn't prevent the recession, and it just gave us a counter trend. I think that we have a more similar situation to what we had in 2001, where the market topped with the initial rate cuts. And we had it on the very same day, September 18th in 2007, and we had it in 2024, same day. 3.5 weeks later, 17 sessions later, we topped out. We went to a new high for about 2 weeks, and then we topped out and started to reverse. I think you can see a very similar situation, but I'm showing you this because we're approaching 17 to 19 day window, 3.5 to 4 week period after our initial rate cut. The rate cuts do not cause a stock market to top and peak. The rate cuts are because the Fed is starting to, because recession is coming. They can't say it. They talk about this soft landing fairy tale. They're going to do more cuts. Now they can't drop rates down to nothing. They did in 2020 or bring back QE infinity and beyond. That's the narrative that people believe. So we're going to have this great bull market that's just going to continue on to 2026, 2027. It's not going to be the case. We're going to have a recession. And this is a guideline. Again, 17 days, 19 days, 3.5 to 4 weeks or so. We saw the bottom begin to fall out of the stock market. Likely going to see the same thing because recession is coming. I told you leading up into the rate cuts, after the rate cuts. I've told you before, I told you during, I told you after. Again, that we're going to see something very similar to what we saw in 2001 and in 2007. The Fed in 2024, September, they did the first cut right here on September 18th. Here's the first cut, okay? The 18th. I'm making the video here on Friday. We just had the market close. We're up to day 12. Told you leading up into that. I told you with that and after, likely see the market peak in mid to early October because it is probably going to do something very similar. Now, it could be shorter, it could be longer. A guideline. History doesn't always repeat, but it often rhymes. It could be very, very close to that, give or take. trying to predict the future. That's not what it's about with those. We're trying to use them as a guideline. Hope you hear what I'm saying. We're up to day 12 here on the 4th of October. Next week, I think we're going to get those 9 counts in the weekly time frame. I think we could complete a divergence. We'll see day 17, which again, it was 17 days, 2007. It was 19 days. That would take us to the 11th, okay, October 11th. If we went a little bit further, and these are trading sessions, by the way, 19 trading sessions, 17 trading sessions. In 2001, it took us 19 sessions. That would take us to the 15th. Very possible next week or right after that, in the next 7-8 sessions, we see a peak and the start of a reversal. Peak on the 17th, maybe it is 8 sessions from now. It is very possible. Now, this is, again, a give or take. It could be a little bit longer. It could be a little bit shorter. Tensions heat up in the Middle East, and we see a rally come Monday, and then we start to reverse immediately, or come Monday or Tuesday or something. Guideline. But I'm showing you why I think what I think. Now, as we're getting this guideline, it has begun to cut. We've got the warning signs of recession, got all these warning signs flashing in the weekly and the monthly time frame that a reversal is likely going to happen with the trend lines, with the sequence counts, divergences, and all the rest of it. So this is why I'm telling you, I told you leading up into the Fed cut that again over the next few weeks beyond it, you're looking for a top. I told you that would likely come in early to mid-October. I still believe that. Drag out a little bit more, sure. Using the data to make educated guesses, looking at mathematically based indicators, negative divergences, trend lines. It's a guideline, not something that we're reading into the future to predict the hour that the market will peak. That's not what it's for. If you're thinking that, you're not listening to what I'm saying. It's a guideline. I think you're going to see a peak here. I think you got a pretty good shot at it. Very well could see that happen next week. It start getting rattled, then maybe it comes sooner rather than later. We'll see what happens. But here we are, 12 days after the Fed pivot. Watching next week. We'll be watching week after that for these 17, 19 sessions, which historically have been important turning points after the Fed pivot, validating the termination of the bull market, transitioning into the bear market. I think you're going to see it again. Just going back to the S&P daily chart again, I think that momentum is going to form a divergence here. I think we're going to go to a new high. I think we're going to be going towards that upper Bollinger Band, kind of cut off here at the peak. But again, that's where I think we're headed. Complete divergences. We are at extremes. Expect a pullback. Told you I thought we'd go make a new high. I think we still are about to do that. Just quickly, I will be putting out a video on Sunday morning or Sunday afternoon, short video on the jobs report. I needed to cover that, but to bring you this important information first, signals turning back to bullish. So check back on Sunday. I'll be doing a very, very short video, the jobs report, the coming economic data for next week, two other things. Again, S&P, we got back above the 10-period moving average. Again, I think you're going to end up forming a divergence here on the MACD. I think you're going to form a divergence here on the RSI. And I think you're going to see the rally continue, okay, up into this level right here. Again, it could terminate sooner rather than later. Start to see a peak and a reversal next week. It can go on into the following week. And it's a guideline. You're going to see a top here, and you do have a nice rising wedge. Sometimes you overthrow the upper boundary of the rising wedge, but I'll be watching to see, do we get a divergence here? I think you got a good shot that that's going to be setting up. Not only do I think you're going to get a divergence right here in the most recent price action on the RSI, but a larger one with the July peak over here. Again, I've talked about this looking very similar to what we had back over here on the RSI. And again, the lower high, the higher high, all the rest of it. Rising wedge. Again, I think that this is going to come to a conclusion. I think it's going to likely come to a conclusion next week in all likelihood, or shortly thereafter, as I've been talking about. But I think it's going to come to a conclusion. People are oblivious to what is about to happen. I get a wake-up call when this thing starts tanking. Over here, we tanked by 15% real fast over the course of several weeks of just dramatic selling. So keep that in mind. It could happen real fast. Now, before I show you the 60-minute chart, again, we're bouncing off this horizontal support level right here from the July peak. We bounced off of it. I talked about this at great length and detail. Told you I thought that that was probably going to be the case, and if we didn't, you had the trend line here in the 20 period just directly below. Again, Be days away from a top, which very well could happen next week. Bouncing off the support level, same thing on the 60-minute chart. The previous peak, we broke above it. It now becomes support. We went above it, back tested, went higher, pulled back. If these divergences played out, they give us a pullback, and now we're resuming the advance. We're going to go higher. Probably going to see a brand new divergence develop here in the 60-minute time frame. We've been talking about this. I've been warning about it, been predicting new highs, and again, back over here, we didn't do it. It was close but no cigar. Told you we were going to sell off. We had the divergences. And over here with the jobs report, I told you to be looking for a bottom. We got that inside day. I told you we were still going to make new highs. Everything that I've said is now played out. Now we're looking for the top. MACD back in positive territory, firming up. These divergences gave us a pullback. The one will likely give us the final peak. And again, that can come this week or shortly thereafter. Be sooner rather than later. We'll be watching. Could peak in a few days. It drag out a little bit. Showing you the guideline. Looking at, I believe that we'll see a peak on the S&P early to mid-October. Again, I continue to tell you, I think that we're going to hit this upper boundary of this channel. Now, again, we may overthrow it. NASDAQ did. We get a powerful rally, and we overthrow it, and we go, towards the 6,000 area. Maybe we don't, and we just go up to it, begin to retreat. Triple negative divergences are about to complete. People are asleep at the wheel, man. Total complacency right now. Told you we were going to go to new highs. We're doing that. People that, although there's divergences, but they haven't played out yet, so they're not going to. And again, the market takes its time doing what it's going to do. And I've continued to predict we're going higher. I think we're going to top. Trend lines I'm showing you, this is one of them. Because the market takes its time doing what it's going to do, then people come to the false conclusion, oh, it's not going to happen. Fake numbers like with the jobs report today. Oh, no, we're going to have a soft landing. Or in for a rude awakening. But these divergences, these triple negative divergences, are going to lead to not a pullback, but a reversal. Strongest sell signal, or case of sell signal with negative diversions in technical analysis, the triple and quadruple negative diversions. I think you're going to go up. Now, I've excluded the shadows here. Maybe we include them when we go a little higher. Maybe we get closer to 6,000. Possible. Maybe we, it's close but no cigar. Maybe we only hit 58 or 5,900. Maybe we fall short of 6,000. But again, this is the trend line I'm watching along with that monthly chart. Triple negative divergences everywhere. Again, my guess is we're going to go a little bit higher. Here's a divergence on the RSI. Here it is on the MACD. It is about done. It's nearly complete. It'd be done already if we, start seeing the market sell off with tensions in the Middle East or something else. Guess is we're going to go a little bit higher. I think we're going to see the divergence develop on some oscillator in the daily time frame. It's not there yet. Talking about that in this video, but again, this is where I think we're going. Maybe we overthrow it. NASDAQ did. We get closer to 6,000. We'll see what happens. But right over here, when we had the peak over here, again, we went 2 weeks, and then we went to a new high, and then that second week we got the reversal. Here, we've now completed 3 weeks. And I told you, again, what was the number? 3.5 to 4 weeks after the Fed pivot, I would be looking for a top. I'd be looking for a reversal. What I've been telling you, before the Fed pivot, before the rate cuts happened, with the rate cuts and the rate cuts, this is what I've been telling you. I think we're going to see a peak. And then, again, I think we're about there. I think we're going to go a little higher, maybe include the shadow. We'll see what happens. But then I think you're going to turn, eventually take out the 20-week, eventually come back and take out horizontal support here, eventually come back and take out this trend line right here. These divergences are going to play out. There's absolutely so much complacency right now that when this begins to happen, people are going to be in real shock. That's why I think it could be Shocktober. MACD, the RSI, they look very similar to what happened over here. Even the price action looks similar, as I've talked about. Also said, again, the Awesome Oscillator has this triple negative divergence. I think you're going to see a red bar. Maybe you get it next week. Maybe you get it the week after that. Maybe you peak and start the reversal next week. Maybe you get a peak, start the reversal the week after. Again, give or take, I think that 3.5, 4 week period we saw with the rate cuts in 2001 and 2007, I think it's going to be very similar to that. Have to be the exact same frame. No, it could be a little bit sooner, it could be a little bit later. but I think you're going to see this divergence complete here, and I think you're going to see a reversal taking us back below the 10-week moving average, the red line right there. People telling us, oh, this is not going to happen. Then they're going to tell us, oh, it's a buying opportunity, attractive buying opportunity. We'll bounce, and then we'll just keep going down, ushering in the bear market. All these divergences with these 9 counts that are setting up for next week on the S&P and the Dow. It's got the same divergences going on with the Awesome Oscillator and the MACD and other indicators. Here in the weekly time frame. Dow weekly chart, again, we've overthrown this upper boundary trend line just a little bit, but again, look at the divergences that are developing. You got this MACD divergence, you got this multiple point divergence on the RSI. These signals are going to play out. When they do, it's going to be ugly. Probably going to play out in the next few days. We'll probably see. You got a good chance of it if history repeats itself, at least rhymes. Next 7-8 trading sessions, we could see a peak and the start of a reversal. Just keep that in mind. Divergence on the Russell, that it's diverging with the MACD from this peak over here. Also, in more recent price action, it's making a lower high. S&P has recently made a higher high, probably going to make another high, and they're diverging like they did back over in 2022 when the S&P made a lower high or a higher high. Russell made a lower high. And again, a huge warning sign of a top. Plus, we have this larger divergence from 2021 to 2024. Diverging again. The Russell and the S&P usually diverge at tops. Diversions on the S&P, MACD is going to likely play out like this one did, where the Russell starts crashing. People are telling us, no, we're going to see this 40% rise on the Russell by August, and it pushed down, and it's coming back up, and it's diverging now with the S&P 500. Saying that in July, late July, that we're going to see this 40% rise by the end of August, and the opposite direction as we're forming this topping process against the S&P 500 diverging. NVIDIA up 1.68% on Friday. Again, I think NVIDIA is going to come up here and take out the August high, and I think that will help NASDAQ fill the gap. Then I think we're going to see the ABC move complete. I don't think it will move above the June 20th high. I think you have a double top pattern here, just like what I think is going to happen for the NASDAQ. It's like we already had on Bitcoin. Again, we have a possible 13 count that can complete up here. The 9 count here, the 9 count here, the 9 count here. These marked turning points, downturns. We saw distribution. We'll probably see the 13 count complete next week. NASDAQ, which I'm talking about in this video. Watch the video all the way through and you'll see it. I think we're headed up here, and then I think we're going to see a lower high. I think S&P will move to a higher high, complete the rising wedge, top out, complete a divergence. We'll complete a divergence here on things like momentum and the RSI, but I don't think we'll move to a new high as I've talked about. I think the bear market on NASDAQ has already begun. I think we're setting up a lower high, but completing a topping process. That will complete the wave 2 and the ABC move. It could take NASDAQ up here closer to the trend line, maybe even tagging it, but still getting a lower high. If we overthrow this peak, we could overthrow the trend line a little bit, and then I'm wrong about this being a peak. But again, I have the guts to tell you exactly what I think. Most people don't. I think we set up a lower high, come back, take out this trend line right here, and eventually start moving to take out horizontal support and start moving towards this trend line right here, going all the way back to the pandemic low. Eventually, I think we will take out the pandemic low I've talked about in the monthly time frame. We're going to top leading up into these trend lines where they intersect. We overthrew them slightly. I talked about the peak at the time, on July 11th, that I thought we had peaked. I still believe that. Thursday's update, I told you about the bull flag that had formed. We broke out of that. I told you again, I thought there was a very good shot. Rally with the jobs report, we did. I think we're headed up to fill this gap up here. The divergence here in with the previous peak here, or we could form a brand new divergence as we rally up into the high. Whichever way it plays out, I go up, overthrow 20,400, maybe go to 20,500, 550, 6, whatever. We don't go that high. Maybe we just overthrow it, and then that's it. I think you're going to see a top here. Bull flag breaking out, getting back above the 50. We're seeing momentum turn back to bullish here in the 60-minute time frame with the breakout. We're seeing the daily charts turn with momentum turn back to bullish. NASDAQ momentum turning back to bullish. Again, I think a divergence will likely develop with this bullish momentum, getting back above the 10-period moving average on NASDAQ daily chart. We now have on the NASDAQ daily chart, in the daily time frame here, a 10 with today's bar. And again, gapped higher, we pull back, try to fill the gap. We did it on an intraday basis with the previous peak there, but really not on a closing basis. But we do have a 10 of a 13 count. So I think that, again, next week we're probably going to complete a 13 count. As I've said, I think that we have an A, a B, and I think we're completing a C here, and then I think we're going to top for a lower high. I think the top was back over here. As I told you, leading up to that peak, getting resistance in the weekly time frame, and we slammed right into it, just overthrew it, and we hit the upper Bollinger Band. I told you about this 9 count that would form this 9-9 sell signal for NASDAQ back at the time. We talked about that. I talked about the one over here as well before we had this sell-off. This count, and even this count gave us a pullback, but the 9-9 gave us the reversal, and we dropped 15.75%, nearly 16% here in a very short amount of time. But I told you I thought we were forming a topping process. Eventually, I thought we'd come up, fill this gap at the 20,398 level here, and get the lower high and complete. I think that's about to complete here, next week or early the following week if we go by the 19 days. Just using it as an example, a reference point. When I called the top on NASDAQ, it was because of those trend lines in the weekly time frame. It was because of the long-term monthly trend line. And again, we had this double sequence count sell signal here forming. I told you we were just, with this 9 count, we were just slightly under those trend lines that I was talking about. With the following week, and I told you leading up into it, volume with the Independence Day holiday, July 4th, slam into those trend lines and begin reversal. We got the doji, rallied up into those trend lines, slightly overthrew them. We peaked on the 10th. We sold off on the 11th. Thursday, we sold off, dropping 500 points on the 11th and leading up into the 10th. That I thought that we were about to peak. On the 11th, I told you I thought we did peak on the 10th the day before. And I told you on the 12th, when we completed this bar right here, I told you I thought we would see a rally back up, lower high at the 78.6 Fibonacci, which we did right on the nose. And I told you by the end of the week, of the following week, I thought we would have an evening star reversal. Because of these patterns, because of the resistance, because of the doji, and so forth. And we talked about all of this at great length of detail back then, back up at the top. I don't think we're going to exceed that. Now, we're rebounding back up here. We are bar 3 of a 9. I don't think we'll complete a 9 count. I think you'll get a lower high. So you fill that gap, and then I think we'll complete a double top pattern, and I think we will turn back down to come back and take out the slowdown over here. In the weekly time frame, S&P is about to get another 9 count next week. So is the Dow. I don't think NASDAQ will get it. I think NASDAQ's going to move up to a new high. I could be wrong about that. If we do, we got a trend line of resistance, but I don't think you're going to complete another 9 count. Divergences on the Russell, on the S&P 500, and the Dow, I think they're going to begin to play out. Got a very good chance that we see a top next week, shortly thereafter, rather than this so-called soft landing and this continued, the new bull market. Uptober, it's Uptober. September, October tend to be with volatility in them. I think we will see volatility by the end of the month. I'm showing you this because, again, S&P is about to get another 9 count. NASDAQ already had its 9 count top. Again, we went a little bit higher. As I said, sometimes you turn immediately. We saw that in the daily time frame at the July high. We turned immediately. And that was with this bar right here, by the way, that we completed. We had already completed a 9 count in the weekly time frame, but we went a little bit higher. And then we got the turn, and I think that that was a top. I think NASDAQ has already started the bear market. We're about to get a lower high. S&P, as I continue to say, I don't think is done making new all-time highs, but I think when we fill the gap with NASDAQ, and it could become as soon as next week, I think it will be done. And these are the weekly charts here. Here's a Dow weekly chart, an 8 of a 9 count this week. I think we'll get the 9 count. 7 bars the high of the count, so I think we will see the Dow move to a new high to complete this count. I could be wrong on that. The Dow tops ahead of the S&P 500. You got in the monthly time frame. This is a monthly time frame. You got a 9 count. Okay. I bet here in August we've gone a little bit higher than the 9 count. I guess some people still go higher, but I think it will reverse by the end of the month. You have a 13.9 over here. We had the 9, we went a little bit higher, and we had this sell-off with the January 2022 high. It was a 9 count that marked that top. And again, we could be forming a very, very large, massive head and shoulders pattern, as I've talked about, will eventually take us back down beyond the pandemic lows, where again, I think we will see at least a 50 to 60 plus percent sell-off on the S&P 500 with the next bear market here. Again, this is likely a reversal pattern here for our monthly chart on the S&P, very similar to the Dow. As we're getting these patterns in the monthly time frame, again, S&P's long-term resistance. Here it is on the weekly chart. Again, we have an 8 of a 9. 9 count as long as we're above the bar from 4 weeks ago, which would be 1, 2, 3, 4. As long as we're above this bar by the end of next week, 9 count can complete. We form the divergences next week in the daily time frame. Again, you could complete a peak on the S&P 500 and start a reversal. Pay attention because, again, this is showing price exhaustion. Here we had a 13.9. Again, went a little bit higher. Got this sell-off here from the July high on the weekly chart. Showing you these sequence counts in the weekly and the monthly time frame because, again, they're showing that prices are getting tired. They're going to move to new highs, S&P 500, but it's showing, hey, could come to a conclusion. And again, my target level for the S&P is between 5750 and 6000. I'm looking for a turn in the weeks following here of the Fed pivot, the beginning of the lowering rates, because historically that is what has happened. Just quickly, I'm not going to spend time on this, but again, this long-term trend line, I've excluded the shadow here. We've already hit it, 5750. We've overthrown that. If we include it, you're going to about 6,000 or so. Again, we're going to stall out somewhere between 5750 and 6,000. We've already hit the low end of my target. Then I think we're going to come back to this midpoint right here, and you're going to end up seeing about a 60% drop on the S&P 500 or so. The bear market will end. I think we'll rebound. We'll get a lower high with the next bull market, and then I think the next bear market will take us back to this trend line, eventually towards these previous bull market tops. So that's a long-term plan where I think we're headed. But again, we're at this long-term trend line. We're getting 13.9 count sell signal in the weekly or in the monthly time frame. This is the monthly time frame right here. We're getting exhaustion showing an 8 of a 9 in the weekly time frame. Those negative divergences in the weekly and the monthly time frame, all warning, hey, probably putting in a major top right now. Valuations are at extremes. They're telling us that, hey, for the next 10 years, returns are going to be low or negative. We know this. Valuations like market cap to GDP, the Buffett indicator, and it's like the Shiller P/E ratio and other market valuations. Highly unlikely we're going to just plow through this trend line and just be able to keep going. More likely, it is setting up a major top here in 2024. Same thing with the Dow. Again, you've got this 125-year trend line going back to 1899. Again, we're slamming up into it. There's a little wiggle room with the shadow here. We connect these points going all the way back to 1899. Again, we're coming up and we're slamming up into this area, forming negative diversions in the monthly time frame, by the way. And again, highly unlikely we're going to just keep going. And, the bull market that we're being told we're going to have with the soft landing. And again, experts are telling us that the people at the financial institutions need to Larry Fink there over at BlackRock, and he's saying we're not going to have a recession. We're going to keep going. The recession indicators say otherwise. I believe the recession indicators. I don't believe you're likely going to be able to clear this trend line and just keep going with the Dow and with the S&P and with the NASDAQ. With the multiple point negative divergences that have formed that are suggesting we're about to complete a major top, a reversal. Again, NASDAQ's turned off major resistance in the weekly time frame, up major resistance here in the monthly. Personally, I think we're going to come back down, take out the low from the pandemic, and hit this midpoint line right here or so, give or take, somewhere between that low and this level here. Maybe we don't reach it, but somewhere that's where I think we are eventually headed. We're going to have the bear market begin. S&P, I think it's already started with NASDAQ in July of 2024. I think it's going to go on. We're going to see it in 2025, probably bottom out in somewhere in 2025 or 2026. Have another bull market that will eventually take us back up, fully set up lower highs, and then go down to these other trend lines in the monthly time frame.